What is up, people? Miles here with Keep the Change, and today we're talking about the time I lost over $3,000 trading stocks, more specifically stock options. Now, this should be a pretty fun video for you to watch and to laugh at my failures, and a video that crushes my spirit, my soul, and tears apart my fragile ego in a matter of minutes. So hopefully you enjoy that. So if you appreciate me being this transparent with you, go ahead and hit that like button. And if you haven't already, go ahead and hit that subscribe button as well. We're trying to reach 100. Once I reach 100, I'll do a Q&A. That'll be a lot of fun. And if you don't like and subscribe, I'm just gonna have to cast a spell on you. Boom, spell casted. Consider yourself unlucky for life, loser. But to the people who did subscribe and like, you're the real ones. Let's do this. How I lost over $3,000 trading stock options. Now, first off, what is a stock option? I don't even know where to begin with that, but we're gonna attempt. Now, if you already know what stock options are and you don't care for a small explanation, go ahead and click to this minute mark and you'll get to see my massive losses. It'll be awesome. But if you want a brief insight into what options actually are, I'm about to give it to you right now. So an option is basically a contract between a buyer and a seller within the stock market. So let's say stock A, let's call it just platypus stock for the fun of it, is at $10 a share. So I think the stock's gonna go to $12 within a month. So I go up to my friend, I say, hey, I know that you own 100 shares of platypus stock. And he says, okay. I say, I'll give you $20 in order to buy 100 shares of this stock within the next month at $10 a share. So basically, I'm paying $20 for the chance to buy the stock cheaper than it could be, right? So let's say at the end of the month, the stock hits $12 and I paid $10 a share for my 100 shares, so $1,000. Now that would net me an instant $200 profit, right? Because I paid $10 for the shares, but now they're worth $12, so I can buy them for $10 and sell them for $12. So basically, it's a way to earn money extremely fast. However, here's the downside. Let's say I give the $20, I say I want to buy 100 shares at $10 in a month. It didn't go up to the price that I thought it would go up to at the time this contract expired. Basically, that would leave me with absolutely nothing. That $20 I gave him, it's gone. I can't get it back. It's all gone. 100% of my investment is gone. And that's really where the risk comes in with options. Now, there's a lot of things that goes into an options contract in terms of pricing. So that $20, it could be worth more the next day. It could be worth less the next day, depending on where the stock price is, depending on how much longer the contract has until it expires. The idea you need to get through your head is that a contract goes up and down in value a lot, but a lot of them expire worthless. So there's a couple different option contracts you can buy. There's something called calls and there's something called puts. Calls means you think the stock is going up. Puts means you think the stock is going down. But let's get past the yada yada. You don't need to understand options contracts extremely well to understand that they're just not a smart move. Now think about it this way. You're basically making a bet on where stock price is going to be in a certain amount of time. You would have to be a fortune teller to be able to tell someone where a stock price is going to go and by when. Now let's talk about my own experience with buying calls and buying puts. I talked about my experience with buying calls a little bit in my top 5 biggest stock market mistake video if you want to go check that out. However, I didn't really delve that deep into my story and why I did what I did. So in 2018, I had about $3,000 to my name. I figured with options, I could have hundreds of percents in returns. You know, you go on Reddit, you see all these people on Wall Street bets and they have plus 1,000% in a month or something ridiculous. And you just look at it and you're like, how do they do that? And it's with options because the more risk, the higher the reward. So you put all your money into these options and they could go up 1,000%. They could, or they could go down 100%. So me, I thought, hey, I'm gonna buy call options. I think the market is gonna go up in 2018. And I started doing this around March. I bought a call option and guess what? It went right. Everything was heading up. Just to show you how volatile options actually are, let's look at my stock account back in the day. So here I had $4,000 and I went up $568, which doesn't seem like a lot of money, but you have to look at the percent. I went up 14% in a day because of my option. Let me just tell you something. 14% in a day is not only not normal, but it's not sustainable. You can't go up 14% every day for years to come. Here's more examples. This was at my all-time high back in June 2018. I was up 36% in a month. That is all because of options. I basically put all my money into options and I rode the wave up, baby. When it was going up, I was feeling good. I was feeling smart. If you look at it, I was up 60% in a year. 60% in a year is ludicrous. The stock market returns 7% every year annually on average, and I was up 60%. Now, of course, this all came crashing down. Basically, I had a bunch of calls on this company called Micron. Micron stock went from around $40 to $60, which is why I had those amazing days. It's why I went up 14%. It's why I went up 8%. It's how I got my account from around $3,000 to $9,000. I basically tripled my account in a matter of months. However, with big ups comes big downs, and that is very, very true with options. So look at this. I went down 15% in a day. Even on my worst days in the stock market today, I don't go down 15% in a day. That's just ridiculous. Another day, down 10%. So you can see as easily as the money comes up is as easily as it goes down. I bought an option for a year out. I held it 6 months in. It was going great. Stock market started crashing. MU, Micron stock, the stock that I put all my money on basically with call options, started going down massively. And in 2018, we had a stock market correction. I think the market went down around 10 to 20%. If I had just held my money in stocks, I would have been down 10 to 20%. But instead, I was down around 50 to 60. So I lost a massive amount of money very quickly. And I just thought I might as well hold on. You know, what's the worst that can happen? I was down $6,000 from my highs, and I was out of $3,000 of my actual money in a matter of a year. Now, just to prove this to you, I have my actual taxes from 2018. The gain amount, if it's in parentheses, that means I lost money. If it's not in parentheses, that means I made money. These are all my options plays. You can see I'm down $109, I'm down $200, down $400, down $100, down $374, down $460. I mean, it goes on, but this isn't even the worst of it. Okay, minus $280, minus $1,000, $1,000 on options, guys. A grand gone like that. And all because I was too greedy and I would never sell it, and I was too prideful. I said, I'm a good investor. I know what I'm doing. I didn't want to admit to myself that maybe I didn't know what I was doing and maybe I should stay away from options. Down $300, down $50. Okay, the list goes on, and you don't have to do the calculations. Okay, I did the calculations just from the options alone that year. I was down $3,889. So really, I lost more like $4K in the market. The point of this video was to show you my mistakes. I put all my money into options. That's essentially gambling, and I basically went broke. I went from around $9,000 to $10,000 in June of 2018, all the way to around $3,000 by December 2018. This completely wiped out my account. This completely deterred me from investing. I felt like a failure. I'm not even kidding. I would never look at my phone. I would be like, oh, I'll probably lose money again. And I just had such a negative, toxic mindset about investing. However, that's when I really turned myself around. That's when I said, you know, I'm going to do this right. And I started buying actual solid companies with good financials. I said, let me buy a company that I think is going to go up over 5 years, not in the next month, because you're never going to predict a short term. Bought the options a year out too. It's not like I bought them a month out. I bought them a year out and they still expired worthless. So could I have been right? Could I have made thousands of dollars? Could I have sold? Yeah, I could have. The way I like to think about it is this. Investing is kind of like a car in terms of the fact that you're trying to get to a destination and you're driving, you're on your way. You can get to that destination a lot faster if you drive really fast and reckless, but you're probably going to end up crashing and burning. But if you just stick to the speed limit, if you just keep doing what you're doing, if you play it more safe, you're going to be fine. You're going to make it to your destination. But if you're trying to get super rich, super fast, you're going to end up crashing and burning more times than not. That's what happened to me. I just want it to not happen to you guys. Stock analysis video coming out Friday, so don't worry about that. We're going to be talking about DraftKings. It's going to be pretty good. Just figured I'd get you guys out a video. The new schedule is going to be every Tuesday and every Friday, so twice a week. So I hope you guys tune in for the DraftKings video.